And for more, let's cross to Kate Moody, our business editor. Those tensions between Washington and Beijing, they are not going away.
Absolutely, Francois. In the final days of the Trump administration, those tensions continuing to mount, and in particular surrounding the tech industry. China's Commerce Ministry saying this Wednesday that the latest move by the Trump administration represents an unreasonable suppression of Chinese companies. It says it could take steps to support and protect the companies that are targeted by Donald Trump's latest executive order. Now, 8 tech companies are targeted by that order, which was signed by the U.S. president late on Tuesday. It won't take effect until after he leaves office. U.S. companies and individuals would, though, be banned from doing business with platforms which include Alipay, which is owned by Jack Ma's Ant Group, as well as 3 apps that are linked to the Tencent Group, including WeChat Pay. Now, these are not platforms that are very popular in the United States, but they are ubiquitous in China. And a lot of big American companies, including Walmart, Walt Disney, even Apple, say that their ability to do business in China depends pretty heavily on those apps. Now, the reason, once again cited by the Trump administration, is concerns that these firms could pass information or personal data about U.S. users onto the Chinese government. It's what we've heard time and time again about Chinese companies, including TikTok, Huawei earlier last year. Because this order doesn't come into effect for about 45 days, we know that the Biden administration will be able to review it and decide whether or not to overturn it. The president-elect has indicated that he will continue to take a hard stance on China, especially when it comes to questions about intellectual property, data protection, and the tech industry. So it's possible that this ban may, in fact, become law.
And this on-again, off-again delisting of 3 major Chinese telecom firms from the New York Stock Exchange, where are we at, Kate?
Well, a third contradictory decision coming out just this Wednesday, Francois. China Mobile, China Telecom, and China Unicom are now all again on course to be delisted from the New York Stock Exchange. Now, the platform made that initial announcement to delist those 3 giants last week. It said it was complying with an executive order from the White House that would restrict American investment in Chinese companies which are alleged to support the Chinese military and which don't meet U.S. auditing standards. Then on this Monday, the exchange reversed that decision. It's now changed its stance once again. This latest reversal is reportedly coming on the back of new, more clear information from the U.S. Treasury Department. We know that the U.S. Treasury Secretary Steve Mnuchin had expressed concern about Monday's decision to allow those companies to remain listed in New York. The 3 companies could still appeal this ruling from the Treasury, but as things stand, they will stop trading in New York as of Monday. Shares of all 3 dropping this Wednesday down as much as 5%.
Speaking of which, how are the markets doing this Wednesday?
Well, Wall Street is trending higher, Francois. The Dow Jones jumping nearly 500 points to hit a new record during today's session. The S&P 500 is up about 1.5%. The tech-heavy Nasdaq trailing slightly there. Shares of the U.S. pharmaceutical company Moderna are up about 4.5% in the U.S. as the EU took steps to approving its COVID-19 vaccine. Now, investors in the U.S. are watching that Senate race in the U.S. state of Georgia and the possible implications it could have for another round of coronavirus relief. A Democratic Senate would likely approve a bigger relief package, so that prospect is boosting trade today. Earlier on, the major European indices closed sharply higher as well. The FTSE 100 outperforming in London, closing up 3.5% as England and Scotland begin those new strict lockdowns. The Paris CAC 40 was up about 1%. The Frankfurt DAX 1.75 percentage point. All this coming despite some new gloomy data about economic activity across the Eurozone. New data confirming that activity contracted even more than initially expected in the month of December across the Eurozone, and a sign as we continue these lockdowns into January that state of affairs could continue getting worse at the beginning of 2021.
Kate Moody will have more business news later. Many thanks.